Hi class, this is Mr. Tan, and we are doing finance in hospitality, and we're focusing on 3.4. Now 3.4 says analyze, which is a keyword. Analyze means to say how one variable affects another. The variances from budget and actual figures, and advise the manager on appropriate future management action she could take to improve performance. So you need to look at the budgeted figures against the actual figures, analyse how one thing affects another, so we need to go into more detail, and then provide future management suggestions to the manager. Okay? So the first thing, the case example you have are budgeted 40,000 participants, okay, with revenue coming of 8,000, cost of sales 3,000, and it tells you that the gross profit from this is 5,000. Administration costs are 800, and distribution expenses 300. So what's the total net profit? You take away your gross profit from your administration costs and distribution costs. What's the total net profit, please? 3,900. Yeah? Okay. But that was the budgeted figures for the financial year, but we know the actual figures for the financial year was 25,000 participants or customers, which brought in a revenue of £4,000. Cost of sales 2,000, gross profit 2,000, administration costs £450, distribution expenses £150. So if you take away your gross profit of 2,000 from the administration costs and the distribution expenses, what does it leave you? 1,400 in terms of your net profit. Okay, so you can add those figures in to it. So where are we down? Starting with the top line, where are we down? Starting with the top line, where are we down?
Well, so participants, we're down to 15,000.
15,000 customers, yes?
Yeah.
So what percentage does that represent of customers that you're down?
62.
So you obtain 62.5% of your customers. So you're down by how much?
So 37%.
Approximately 37% you're down. Yeah, 37.5% you're down. Okay, that's quite a lot, isn't it?
Yeah.
In terms of your budgeted and actual. I mean, really, what's gone wrong? But let's look at the next line. Your revenue. Your revenue in terms of budgeted was how much? £8,000, yes? From 40,000 participants. Now, how much did your revenue go down in the actual?
4,000.
No, the revenue. So revenue went down to 4,000. So we can see that this revenue went down by how much?
50%.
So this revenue went down by 50%, but how much did your participants go down by? 37.5%. Yeah? Because you obtained 62.5%. So your revenue so your participants went down by 37.5%, but even though you had a lower percentage of participants, you had a higher percentage of revenue loss. Does that make sense? Or not?
No. What do you mean?
So, we can see that the revenue, the actual, was 4,000, yes?
Yeah.
And the budgeted was 8,000
Yeah.
from 40,000 and 4,000 from 25,000. But if we compare like for like, we said that we lost 37.5%.
Yeah.
So we would expect to lose revenue 37.5%. But we didn't, we lost 50%. So we lost more. And my question is, how come we lost more?
It could be so many reasons.
It could be so, but okay, but that's something to look into. So you need to be, so that's the next line that we need to be looking at, because even though we lost 37.5% of participants, you would expect, like for like, that we'd lose 37.5% of revenue.
Which is more low.
But we didn't. We lost 50% of revenue. Therefore, we've lost more. Yes? Next, cost of sales was £3,000 budgeted, and the actual cost of sales was £2,000. So what is that telling us? That the cost of sales have gone down by what?
33%.
So it's gone down by 33%, yes, cost of sales. But, so 33%. So is that good or bad?
Well, it's good because we was able to control our costs.
Yes, because it's better because, Mary, because we lost 37.5% of participants. So the cost of sales loss was only 33%. You understand? So that's not bad. So the cost of sales is not bad. So the cost of sales is not bad. What is a problem is the revenue. The revenue is a problem because we lost more than the amount of participants we lost. Okay? So when you're explaining this question, you're using this and you're explaining it line by line. Yes? We're going to come back to this in a second, the higher things. And then you move on to the gross profit. The gross profit in the budgeted was how much? Tell me. 5,000. And how much was the actual? 2,000. So the gross profit, how do we work out gross profit?
Revenue minus cost of sales.
Gross profit divided by sales.
100.
Sorry. So gross profit is the total number of
Minus cost of
revenue divided by gross profit times 100. Revenue. So it's gross profit, revenue. The profit divided by revenue times 100, which gives you how much?
Wait, total number of revenue divided by.
It's about 12.5%, isn't it?
Okay, let's work this out. So 5,000 divided by 8,000 gives you how much?
I just want to know the.
Just do that for me, please.
That is about 62%. About 63%.
Okay, gross profit. Now let's just work this out for a second. Bear with me for 1 second.